India's third largest software services exporter, HCL Technologies, recently took everyone by surprise. It decided to raise fresher pay packages from 3.6 lakh rupees per annum to 4.25 lakh for FY23. This new package would also be applicable to those freshers who joined the firm in FY22. Last year, mid-sized IT firm Happiest Minds Technologies reportedly increased its fresher salaries to 5.5 lakh rupees, which includes a base salary of 4.25 lakh rupees and the rest being joining bonus. Freshers' salaries have remained stagnant between 2.5 lakh to 3.5 lakh rupees for a decade now. In a bid to attract fresh talent and keep them for longer to counter the impact of rising voluntary attrition rate, companies are giving joining bonuses, double-digit pay hikes and promotions. Some employees are seeing their salaries double when they switch jobs. According to a news report, Infosys, which reported a 27.7% attrition rate last quarter, plans to have an average salary hike of 12 to 13%. High potential employees will get increases of 22 to 23%. Globally too, tech talent is being rewarded as never before. Microsoft said it will nearly double its budget for employee salaries and boost the range of stock compensation it gives workers by at least 25%, mainly affecting early to mid-career employees. Shiv Agrawal, managing director at recruitment firm ABC Consultants, believes that the recent salary hikes are among the highest ever. An HR executive told Business Standard that salary hikes at TCS are already in double digits, and in some cases it is upwards of 25%. In the third quarter of FY22, TCS had given promotions to over 110,000 employees. At Wipro, the company announced that at the junior level, promotions will happen on a quarterly basis. Employee costs for the top 5 Indian IT services companies have touched an all-time high of 2.85 trillion rupees last fiscal, driven by strong fresher hiring and pay hikes. They grew between 15% to 35% for these companies.
What's happened in the last 1 year versus what happened maybe a year prior to that are very different. A 20% kind of compensation growth is kind of in line with the headcount growth that they've done. 90% of their net additions in a year is all about getting your fresh lot into the talent base. So you can imagine that where they've added about 5 lakh people, of which about 90% is clearly in the fresher lot. To have a compensation cost increase of 20% in a single year is a massive movement that's very clearly evident looking at the numbers in play. There is a demand supply gap of what we see out there in the market for top talent, Krishna, is about 4 to 6 offers chasing every top talent out in the market. So definitely, yes, what has been driving a 2-digit increments within the current existing workforce is a largely a voluntary movement of talent where they're going towards opportunities that are paying them more. Enterprises have gotten smart to not let them go and incur a cost of hiring. They would rather retain them by paying them the 2-digit increments. Enterprises that have started training people the last year, knowing that this shortage is coming, they will not be able to put talent in the market for a minimum of 8 quarters. It is not a quick fix. See, the fresher salary has been a pet peeve of many people like us who say that this needs a correction. Enterprises will be bound to follow suit. One player starts moving the salary needle, enterprises will have to follow suit, and it will remain there till the supply demand gap exists. Post pandemic, if let's say fast forward 2-3 years kind of thing going to, I think we are overall seeing a shift in the salary structure of this market itself. What we foresee is the salary correction that is happening right now. It may not reverse itself. It may not drop and go back to the pre-pandemic lows. That's not a pattern that you should expect. However, the ability to retain this across the board will be questionable.
Universities that see bulk hiring noted that differential hiring has gone up. What this means is that based on a student's skills, he or she can attract a higher package. TCS has a program called TCS Digital that looks at hiring students with specialization, and the pay package starts from 7 lakh rupees. Cognizant's Digital Next, for which if selected, a fresher can get a starting pay package of 6.75 lakh rupees. Wipro Turbo, a similar program from Wipro, can take a student's salary package to 6.5 lakh rupees.
Salary hikes are purely driven by demand-supply gap. Having said that, industry has been witnessing headwinds with consistent revenue and profitability growth, which should translate to larger wage bills in order to meet the demand. one can clearly see a directional shift towards higher salary hikes if the upward trend continues. CL has bitten the bullet first, as it has thriving products and platforms businesses which need more competitive talent. We definitely think others will follow suit by introducing differentiated pay, as the demand is shifting towards highly skilled talent with AI, ML, data science, cloud, blockchain, and so many other emerging technologies. Eventually, as seen with global organizations like Amazon and Microsoft, Indian IT services providers will also adopt a higher pay structure to fight the twin battle of demand upsurge and high attrition.
The sector had seen major layoffs just before the pandemic. Companies are now trying to fill the gap to cater to the strong post-pandemic demand pipeline. For long, enterprises have had the command over the pay, and this seems to be changing now. While IT companies have been managing their operational costs by keeping a tight check on the fresher salaries, they may find it difficult to attract new talent now at the old packages. We can therefore expect the industry to settle at an overall higher pay structure even after the current talent supply issue is resolved.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.